Today, I'm going to be starting a forex series on supply and demand concepts, and by the end of this series, I guarantee your understanding of the markets will change forever. Structure is going to be the first topic of the series today. I believe it is the most crucial part of understanding the markets, and I will be going through over absolutely everything you need to know, step by step, with examples on how to execute the trades just based on structure alone. So let's get this video started. The basics of structure is simple. Understanding how to mark out the highs and the lows of the market, known as swing points, and understanding what strong and weak highs and lows are. So to start off, over here we have three types of market structure. Let's look at it one by one. Now, you can see over here on the left, we have the bullish structure. Bullish structure is constantly creating levels of higher highs and higher lows. Now, what do I mean by higher highs and higher lows? You can see the lines that I drew over here broke individually one by one, right? As he comes and try to make higher highs, right? And because it keeps breaking higher highs, the new high that's formed is going to be a weak high. Why is this a weak high? Because in a bullish scenario, we are looking to long the market. And if you want to long the market, we need to take out the most recent high to continue to push higher. And why are the lows considered strong lows? Right? Each time it creates a new high, a new low will be created. Right? And now this new low will be considered a strong low. Why this strong low is called a strong low is because we are not expecting this particular low to break. We are not expecting it to break, because if it breaks, there will be something called a change of structure, right? Where the price is no longer bullish, right? So in order for price to remain bullish, price has to respect the strong low to continue higher. Alright, so that is the gist for bullish structure. Now, when you look at ranging structure over here, right, you can see ranging structure is basically within two lines or two rectangles that you can draw. The highs and the lows are relatively around the same place. They are relatively equal highs and relatively equal lows, and this is where some people may call it support and resistance, right? This is what we have in a ranging market. Normally, when we have a ranging market, we want to wait for clearer direction for it to either turn bullish or bearish. So at this point of time, I wouldn't be wanting to I wouldn't want to take any trades, right, within the range. I will be waiting for a breakout of the range towards the upside or towards the downside before looking to take any trades. So this is the structure that I personally will not trade myself. I personally perform in a trending market such as bullish market or bearish market. Doesn't matter which one, but I perform better with a trending market, not a ranging market. Alright, so let's move on to the third example or the third type of structure, bearish market structure. Now, you can see over here, similar to bearish, we have constant levels of lower highs and lower lows, right? These lower highs over here, right, has never broken, right? As you can see, as per my drawing, right, this high has never exceeded the previous highs because we are creating lower lows to continue the momentum downwards, right? And that's where price wants to go because price is bearish. Now, with that being said, as price is continuing to come lower, right, whatever recent low that it has created, right, in the trend itself will be considered a weak low, as mentioned over here, because price wants to continue coming downwards. So if price is going to continue coming downwards, what can we expect next? A retracement into, right, this leg up while expecting the strong high. And once the strong high is respected, we can expect price to continue to break this new low that is formed. And this is another weak low, right? Weak low. I'm just going to put it as this, weak low. Alright, you guys get the idea, right? And now we have another strong high, right? Strong high. So in essence, these are the three types of market structure that you guys will be dealing with every single day in the market, right? Depending on what pair you trade or what market you trade. Essentially, it could be in stock market, it can be in crypto, can be in forex. This is the basis, right? Three different types of structure. Now, let's take a look at real life chart examples of structure, so that it's easier for you to identify and take note of in terms of patterns to look for in a bullish market, in a bearish market, and in a ranging market. Alright, let's take a look at over here. You can see over here there is basically a very bullish uptrend on the pair Euro US dollar. And here I've highlighted every single break towards the upside called break of structure. So take this down. This is considered break of structure, right? BOS is break of structure, right? And this break of structure, each time it has created a break of structure, a new low has formed. And this new low is called a strong low or higher low, right? So let's take a look at when price breaks this new high that is formed after retracing, right? As you notice, this strong low hasn't broken as well. So price is continuously breaking towards the upside in an uptrend market structure, right? As you see, price pumped up, right? Failed to break the low, pumped up again, broke with a wick, and continued to create that structure bullishly, right? Creating another level here which I missed out, right? This is a strong low, right? As you can see, if I were to draw it out, it will look something like this, right? Let's draw the path, right? There is a sell to buy, break structure, retest, sell to buy, sell to buy, sell to continue buying. Oh god, I missed it, right? So from here, and then if I were to continue drawing it, it will look something like this: up and down and up, all the way up to here, and down and all the way up to here. So as you can see, we started to expand really big already, right? So this is a good sign of a bullish market. As long as this particular low here hasn't broken, right, we can be expecting bullish market structure on this particular pair. Alright, so let's take a look at a bearish market. Looking at this chart, we have a bearish trend, a bearish market structure, right? This bearish market structure is denoted by the lower lows that it's creating, right? As you can see over here, there is a break of structure 1, break of structure 2, break of structure 3, break of structure 4. And each and every single time there's a break of structure to the downside, there is going to be a strong high that is formed, right? And this strong high that is formed will not break the previous high formed, right? Because this is where price wants to continue to create a downward trend, right? So for that to happen, the last made high cannot be broken. So therefore, each time it breaks a new level, this new high has to hold. Okay? Now, in what case will you have a break of this strong high? When there is a change of structure, right? So I'm going to type this down. Right, this is going to be a change of structure, right? So how would that look like? So within this change of structure, what you'll be expecting is for this strong high here to break. And once this strong high here breaks, we have now formed a new level of strong low. Assuming that this is the lowest that it goes, this is where we have our strong low. Right, this will be a new strong low like this. Let me type it out. Strong low, and you have a weak high here that forms. Right, so we just bring this out. Right, you will now form a weak high. These highs will now become weak because price is looking to constantly break these highs to continue an uptrend. Right, so once this strong high gets invalidated, right, it becomes a break of structure, right? It becomes a break of structure over here, right? And then we have the same thing happening on all these, same thing, weak high, break of structure, same thing, right? And you will have the same thing here, just extend it a bit more like that, and you will have your same strong lows, right? Each time a new high is formed, a new strong low will be formed, right, in accordance to the high that it broke. So in this case, initially we had first a downtrend, right, with all the strong highs being respected. And once, say for example, this particular line here is the real chart that we are predicting, price has a chance to break this high And once it does, with a body candle close, right? Personally for me, I look for body candle closes, and if it does happen, we are looking at a change of structure, right? This change of structure over here, right? Let me just make it bigger so that all of you guys here can see, right? 24 should be good enough. There we go, right? So once this break of structure happens, there will be continuous bullish momentum that we are expecting for this lows to hold, right? So this low, assuming a bullish uptrend, should never go below this low. This low here, before breaking up to the upside as a retracement, shouldn't break this particular strong low to continue with the upwards trajectory, right? So far I've covered two different structures, bullish and bearish. There's still one more structure that I have yet to cover, right? And this has to do with ranging structure. So let's get into that. Over here we have a ranging market. Now how do you tell that we have a ranging market? Right now you can see there are levels over here that have been holding, right? For some reason, the price has been constantly rejecting these areas, right? 1, 2, 3 times. Top side rejected 1, 2 times, and perhaps even created another level of resistance over here, right? So these are where areas are potentially rejecting off, and this is ranging, right? So on the higher time frame, like the daily, what you see is that we are in this range over here where we are not deciding to break up towards the upside or towards the downside. We are playing within this, how many pip range? This 355 pip range, which isn't too good, right? Obviously, I'm picking out an example for you guys here to see, but in this type of conditions, you guys shouldn't be taking too many trades because of the fact that it is risky. You only can take high probability trades once and only once price starts to break out of this range, right? So this is how structure is in a ranging market, right? Structure is going to be bouncing up and down a certain level, right? The support or resistance, you can call it supply and demand zones. To me, these are just areas where price are looking to build up liquidity, which is another topic that we will be going into in the future, right? So currently, right now, let's stick to understanding that this is a ranging market. I can basically sum it up in a box, right? This is the box that we are ranging in, and I want to see, right? For me to take potential trade myself, I'm looking for price to do something like this, either break up towards the upside like this, or I'm looking for price to break down like this, and I continue to short the market, right? So I want to see a breakout of the range. So that is my personal criteria to look for a trade entry just based off a ranging market structure. Now, obviously, within the time where when you are inside the range, there are two types of trades that you can take. Two types, right? Two types, right? Type 1, sell the resistance. Sell the resistance. 2, buy the support. Alright, so these are the two types of trades that you guys can take. So that means if you were to take a buy, right? So this is more of William's style, right? His style is a swing trader, and what he'll do is he'll place a sell here, a buy here, targeting the next level of resistance, which is here, for a nice 1:3 RR or 1:2.8 RR. And if price will ever come back up here, he will do the same thing. He'll place a short sell like that, right? Which stops above the range area, and then take price lower for 1:3 RR as well. So this is the type of trades that you would be taking, right? Only if you're in a range, but I personally would wait for a breakout for a higher probability setup. Alright, so now let's recap. To sum it all up, it's pretty simple. From the start of the video, we mentioned that there are three types of market structure: bullish, bearish, and ranging, right? In a bullish market, you're creating constant higher highs like this, right? Higher highs and lower highs, higher highs and higher lows, right? And in a bearish market, you're creating lower highs and lower lows like this, right? And in a ranging market, you're creating something like this, right? Not a new high, not a new low, we're just ranging around like this, right? So the price hasn't found its direction. Now, in a break of structure, right? What constitutes a break of structure? Price needs to break a high on an uptrend and break a low on a downtrend. What does this mean? Right? So when price does this and continues downwards, it has to break a low for a break of structure to happen. And when a break of structure happens, a new high is formed. Right? Only once the break of structure happens, a new high is formed. Right? So same thing happens here, right? This high isn't formed yet until this low here breaks, and we call it a break of structure. And then now we have a new strong high that we need to protect in order to continue towards the downside. Vice versa for the bullish trend. Same thing, right? Either to draw, I don't think you guys are mentally, incapable of imagining the flip side, right? So now let's take a look at what happens if price continues to change character. So what does that mean? If price starts to reverse, right? If price starts to reverse, this is what we'll be looking at. We have a price movement up into this high that we last formed, right? A strong high, and it breaks the high. What does this mean? We now have a change of structure. Structure wants to go bullish at this point in time. And when structure wants to go bullish at this point in time, we are looking for price to hold this newly formed structural low, right? So if you draw the structural low over here, this is our new strong low, right? Strong low. There we go, right? And if price so wish to continue towards the upside, it should respect this low and continue breaking structure again, right? Breaking its newly formed high with a break of structure. Right? So this first initial break is where we have our change of character, or what we call change of structure, right? It's where it indicates a potential reversal in the market direction. So in a bullish market, when a chop happens, it could indicate a bearish market, right? And in a bearish market, if it chokes, right, or it changes characters, then we are looking for a potential bullish market. And most importantly, right, last but not least, in a ranging market, right? So let me go and draw it for you guys. In a ranging market, please, for the sake of everyone here, ensure you guys do not take a trade within a range, because it is, number one, high risk. Number two, it is going to be low probability for you to take a winning signal, because sometimes you may be chopped out of a position because you don't know where price wants to go, right? So what is the best course of action when you are faced with a ranging market? Number one, wait for a breakout towards the upside like this, and then wait for a retest to come up higher, or wait for a break of structure towards the downside, breaking through all these lows with a body candle close, wait for a retest, and then continue shorting. Alright, so that is essentially what we're looking at, right? So let me draw that again. Screen sort of glitched out, but essentially what we're looking for is like this, right? Like that, and then continue lower like this. Okay, so this is what we're looking at for a ranging market. So please be patient in the ranging market. Sit on your hands. Don't do anything until the market is broken out in a certain direction to give you a clear indication of where price wants to go, right? So this sums up everything that we need to know for our structure series. Okay, so if you like this type of structure and you want to see more series of such potential topics like break of structure, the difference between break of structure and change of character, you want a series on order blocks, you want a series on fair value gaps, a series on, say, liquidity, all these big terms that are being used in the smart money concept idea trading community, right? Do give us a like, right? And comment down below what else you want to see so that we can continue creating this high quality content for you guys, right? So if that is all, there is nothing else for you guys to worry about. Just give us a thumbs up and subscribe if you haven't already, right? And I'll see you guys in the next video.